Testing. All right, guys, we're going to go ahead and start recording the macro stream. What's up, Alon? Thanks for joining. I guess a lot of people are busy today. Also, I don't think a lot of people really believe that we're going to get a bounce right now. Of course, on the weekend, I was pointing out that we had created some bullish divergence on the 4-hour, the 6-hour, and then it translated over to the 12-hour. Let's just go ahead and see, are we getting anything on the daily? And it does look like we're getting just a hidden bullish drive of phantom divergence on the daily. So is this a possible area for a bounce? I would say probably so. Yeah, in our 6-hour and a 4-hour is pretty clear. And yeah, that 12-hour did lock in place. So is this the bounce that we were looking for already? Well, it could be until we cross basically 112,500. I'm really not going to give this too much credibility. Effectively, what we need to do is pass this midline here on the 12-hour, where we do have that bullish divergence, and that would also cross our volume-weighted average, as well as the 50%, which is going to go ahead and put the bulls in control. Now, as of right now, this is just considered some type of a mean reversion to the upside. You can see often when we're at our lows, we often get little bounces up to the 50%. But unless we actually cross that 50%, then it's not much of a run, is it? It's just kind of a sideways consolidation. So we still have a little bit of work to do. I'm not too convinced that this one is just going to Giga Chad. However, since this is the macro stream, I would like to point out that Trump did kind of walk back some of his policies on tariffs this weekend, just a little bit. Some of the products that can't be fully made in the United States, he's walking back some tariffs on those ones, which I think is a helpful development. Probably the markets are going to like that next week. So again, that bodes well for a little bit of pumpiness. Maybe more than just the average mean reversion, maybe a little bit of a push. We'll find out. We also have the Trump kids, Eric, coming out and saying that Bitcoin is going to Giga Chad pretty soon. So I don't know what type of insider information that Eric Trump has, but of course the Trump kids are in the crypto industry. So if you are interested in getting in on a taco trade, right, there's your Donald update. And if you're interested in getting in on a Trump family trade, well, as we know, the kids are big time into crypto. And to be honest, I think they're pretty serious about it. So, they're making real projects, whereas, their dad and Melania are just making memes and stuff. The kids are really hard at work there. So, we do have to give Eric some credit and see where Bitcoin goes from here. If he's right, then maybe we need to listen to him a little bit more carefully in the future. Yeah, that's just how it is these days. So, we may be a little bit flip-floppy on tariffs, but tariffs aren't everything, okay? Now, if we do kind of just, pull back a little bit, we can understand that, if we're just talking about tariffs, tariffs don't necessarily impact the Bitcoin cycle. And we are at that point in the Bitcoin cycle, as I did point out in last week's stream, where it's really kind of make it or break it, right? Normally, what I would expect is one last push on Bitcoin, or at least a sideways consolidation on Bitcoin when we're at this point in the cycle. And that gives a point of support for the altcoins to potentially rip. So now that we have Donald Trump coming out and saying that he's not going to be as harsh on some tariffs, we got the taco trade. Now that we got the Trump kids, right? Eric coming out saying that Bitcoin is going to Giga Chad. We do have to be on high alert that the insiders are preparing for a potential move to the upside. And let's say that Jerome Powell comes out, at the end of the month, I believe it's on the 29th, and decides to do a double rate cut instead of a single rate cut. Maybe the market is going to find that very interesting. Or potentially what could happen is that they do start quantitative easing now that they've officially stopped quantitative tightening, okay? And I believe Palau gave a notice that they're stopping tightening last week. His strongest indication yet. Tightening refers to two things. It can be increasing interest rates, but it can also be tightening liquidity on the back end, okay, in kind of these hidden ways. And so they've still been kind of tightening on the back end, and they stopped that recently, okay? So what comes next is potentially easing. In fact, it has to come next, okay? These things operate in cycles. And if that comes at the same time that we're getting rate cuts on the front end, then there could be some, there could be some opportunities for a rotation into sectors that can benefit from these things. And if most of the industry has not benefited yet in this bull run, where primarily we've seen just like AI and Bitcoin, then again, anytime that we have massive liquidity regime changes, while the markets can flop whatever has been doing well, because they were doing well under a certain set of circumstances, right? If those circumstances change, of course, we can see the market drop as those leaders pull back. But what tends to happen is that those that are not equally valued in terms of like all these ratios of risk to reward, they may play a catch-up trade. And let's say that gold has been spiking like crazy. Let's go ahead and take a look at gold over here. And this would be an example. If we see that a gold is kind of having a blow-off top and starts to get a little bit toppy over here, and then starts to consolidate back into these more reasonable ranges, let's go ahead and throw gold's EMA on, then we can see that gold is extremely high above its daily 200, right? So you can see the 200 EMA over here. Does gold typically come back to the 200? Every once in a while it does. So this run right here is kind of exceptional. If we pull back even further, you can see that gold likes to touch the 200 daily EMA quite often. So it's not only exceptional, but it's extremely weird that gold is this overheated. And now that gold is, effectively at this 3618, that's a very high, fib level to be at based upon its last pullback here and its last consolidation zone. It's at my critical level here, okay, on my custom built indicator, right? And, it's interesting that my custom built indicator is saying like, hey, this is like super critical on the daily. You need a cooldown. And if money is going to rotate out of gold because there's just like gold mania right now, right? This was the measured move. I don't know if you guys can see it. This was the measured move. It is like tripled the measured move, right? So it needs a little bit of a cooldown, maybe coming back to 4,000, maybe coming back to 3,500 even. And, we saw that type of cooldown happen here in miniature. And if something like that happens to gold, I mean, we're talking about like hundreds of billions of dollars that can rotate into other sectors of the market as people take profits on gold. And one of the key beneficiaries could be Bitcoin. Okay, so let's just say that Bitcoin is a beneficiary of some type of a gold consolidation. There are still people trading Bitcoin as a risk-on asset, but there's also people now trading, maybe about 30% of the Bitcoin market, which are trading Bitcoin as a risk-off asset. In other words, a store of value. And those people are also buying gold. But right now, they're buying gold more than Bitcoin because gold is outperforming Bitcoin. But if gold just starts to like consolidate even a little bit, they might shift that 30% over to Bitcoin, and that could create a floor for Bitcoin. It could also pump Bitcoin, okay? And so if Bitcoin has that consolidation sideways, where even if Bitcoin just went sideways for months and really did not much at all, right? Or if Bitcoin went up, almost to any degree, then you could probably see your stablecoins, your altcoins start to stabilize as opposed to being in free fall, which is what these altcoins usually do, right? And hopefully we could also see that altcoin season having a base to launch off of should that liquidity regime be changing the market from risk off to risk on. then what we can see is the last hurrah, the quote unquote, the last hurrah in these markets where everything gets its chance, right? Everything gets its rotational chance. It's kind of a flash in the pan. You know, obviously those risk on assets, they don't last that long. But as long as, you know, as long as there's money to do it, and if some other trades are looking just overpriced, then we do see those rotations. And typically, a bull market is not over until everything gets its turn. Okay, I've said that many times. You know, it could be a baby turn or it could be a big turn, but usually everything gets its turn in a rotation. And so we would expect some type of risk on run towards the end of this. And again, guys, from my calculations, I'm looking at the end of the market for altcoins as being, you know, typically I would expect that sometime in December, with a possible extension into January, should things just go swimmingly well. As for Bitcoin, it could be the end of Bitcoin's cycle already. But as we saw in last cycle, we got a double top on Bitcoin, and the double top actually exceeded the prior market, the market top high. So this was when the top of the Bitcoin market should have occurred. We did get some massive pullback, and then we actually made a higher high than that one. If this chart is continuing to go parabolic, and we would expect, like, you see how this low is extremely deep versus this run, we didn't get anything nearly as deep on this run. So if we're getting shallow pullbacks, and if the gold money does rotate into Bitcoin and just creates that shallow pullback once again, then we're just stair-stepping to the upside. And even if this is a dead cat bounce on Bitcoin, again, there still is that potential for Bitcoin to have a massive run. I'll just point out that, you know, while we're on the critical level on gold there, right? Like the critical level here on the weekly for Bitcoin is 180K, right? Our bumper zone is 140. And, you know, even a, you know, let's just say that we get rejected from really bullishness, you know, we could see a retest of our all-time highs, okay? And any type of support like that could still create the base for an altcoin run